Hello, this is Gary Schnitke, and this is a 5-minute farmdoc daily dealing with what will 2023 projected prices be. Sitting here in October, we see very high prices, and with those high prices, we will see profitability on the farm. However, we will be much more confident about 2023 once projected prices are set for crop insurance. Those crop insurance prices will be set in February based on settlements of futures contract during that month. That will determine the projected price or the insurance guarantees for RP, SCO, ECO, and all products except for MP, margin protection. Again, we have high prices now, but will we have high prices when we set those projected prices? To look at that, we looked at a history of prices in October, and this would be the average of the settlement prices of the December contract during October, compared that to projected prices in February, and also compared that to projected prices in October, when harvest prices are determined. All those price series have a high degree of correlation. For example, the October price and the projected price have a correlation coefficient of 0.90. They do move together, but there is variation. To look at what the projected price may be for corn, we took the current December contract for 2023. That is traded at $6.15, and then looked at historical variability and came up with variability on projected prices. If we do that, we find that there's a 10% chance, based on historical changes in price, of a projected price less than $5.65. Between $5.65 and $6.65, or a dollar range in there, we have a 62% probability, and there is a chance of higher prices at 28%. Overall, though, we still have chances of lower projected prices moving into February 2023. Similar for soybeans, there is a high degree of correlation between the October price and the projected price, but there is variability. Currently, that contract is trading at $13.45, and that would be during the first week of October. Using that in historic variability, we find that there's a 24% chance of a price less than $13, 48% chance of being between $13 and $14, and a 28% of being over $14. Again, there is variability there in potential for both higher and lower prices. If a farmer is concerned about those lower prices, pricing some of that grain now may be a good idea. That way we can establish a price which will be high and will relatively high and likely result in profitability rather than waiting till later in the year. Again, perhaps, most likely, pricing more grain now is a good idea given the high cost and the high prices that we currently see. You can read more about this in the FarmDoc Daily listed in the video description.